All right, guys, welcome back to the channel. Now, we've got a very different story this week from last week, and I'll explain why in today's video, along with my thoughts on the macro cycle, looking at where the S&P 500 is going, the NASDAQ, of course, the real estate cycle and the economy. But the big one that everyone's here for, of course, is Bitcoin. Now, as I said, it does look like a very different story from last week, but how the hell can that happen from week to week? That's what I want to explain in this video, what I'm looking out for in terms of a complete market breakdown, a complete bear market for Bitcoin, and of course cryptocurrencies, which are essentially in a bear market, going down over 80%, a lot of them, and what would take for the market to get back into a bullish stance. Like the video, subscribe to the channel if you are new here. I make videos almost every single day, except for days when we get cyclones. So apologies that I haven't been here for the last few days. This has basically been the scenes outside my front door. Massive pine trees fallen. We've got huge coastal erosion here, like you can see with this photo. Massive waves were going on, destroying heaps of stuff. And basically my garden is a bit ripped apart. Lots and lots going on outside at the moment, but it seems like we're getting to the end of this with the cyclone. We've got some internet, some power, and we'll be back here every single day, provided everything works out. Okay, guys, let's kick it off with some of the crypto data. I've gone through the analysis, putting it all together. Nice, succinct video for you guys today, just starting with crypto. Now, the exchange volume has dropped off again. We've got data going back a couple of days, hoping for higher lows and higher highs to begin to form. But as we've looked at over the last, say, 3 to 4 weeks, when this low came in, basically waiting to see where this exchange volume gets to essentially hold out and grind around like the previous times before Bitcoin started to take off, and some of those cryptos as well. Essentially, we need to see some stability with the exchange volume to assess whether we're seeing more buyers stick around, more of the investor type, so the market can continue to tick up from there. So far we've moved up. We did not make a new higher high before the market started to roll over again. So it's going to be interesting to see where we get to on the way down. Are we able to hold this low, or do things go lower? As for liquidations, they've gone up. We're at $600 million in the last 24 hours. The longs got wrecked to the tune of nearly $500 million. So it seems like people are still trying to long this market on some of the lows, on leverage, that is. So 600 million in the last 24 hours, still getting wiped out here on the long. So pretty big long liquidations compared to the shorts. And the ratio here that Michael looks at a lot, we're at about a 2% differential now, 2.5% actually, with the longs at 48.8 and the shorts at 51.2. So normally you'd see this a little bit closer together with the 50-50 to see that balanced market. But at the moment, the longs are quite heavy. So maybe we will get a temporary bounce here. For the Google Trends, they've started to tick up a little bit here, but probably because of the weekend with the crypto strategic reserve White House summit meetings as well, that Trump was there with all of his other crypto friends. But it seems like that was yet another sell the news event. Things are looking a little bit dire here, as I've been talking about, but we need to keep balance here, looking at both sides of the market. The fear and greed index has dropped to 20 over the last 24 hours. We had fear on yesterday, last week 33, but the big one that I've been following here, and I'll get to this later in the video, looking at the time frame as to potentially when we could see this low and the market start to move out of that. We're looking at around that 4 to 5 month period. So I've got to do an update on that for you guys as well. A couple of the headlines: JP Morgan skeptical of this US strategic crypto reserve, as I think a lot of people are skeptical now based on the wording that was used for the strategic reserve, saying that they were going to hold what Bitcoin was there as opposed to buying up heaps. I think there was something about Michael Saylor saying that Trump's going to buy 1 million Bitcoin, not $1 million, 1 million Bitcoin. At least that's what Saylor is hoping for, I guess. But essentially the market has not liked it and the price has gone down from that point. Now, something else that I've been following when it comes to this strategic reserve is that it's possible that Trump can use that money for whatever he likes, as opposed to like Norway's fund that they have for their oil reserves. So basically like their pension fund that they use, it can't be dictated by the president or prime minister or whoever is running the country. Whereas in this case, for at least from what I've read, the president can do what he wants with the money in that strategic crypto reserve. And I guess that's the benefit of Trump creating it so that he can use this money. And if that's the case, well, then he can sell it whenever the hell he wants to too. And maybe that's what the market is also looking at here. Trump signs looking at it in terms of why the price is going down. Trump signs US crypto reserve order as Michael Saylor says US may buy 1 million Bitcoin. There it is. That was a headline that I was referring to. So essentially a lot of what you would consider good news here, but the market is sold off on the good news. So we're getting a news failure. That's essentially what a news failure looks like and why there is a higher chance that the price would go down. The weekly report's coming out in 24 hours. A link in the top of the video description is where you can grab your free copy. Name, email address, subscribe, and you'll receive that in about 24 hours time. Bitcoin price is currently sitting at $82,500. It has not broken the 50% level yet, if in fact at all. And that's why I think it's one of the most difficult times in this bull market. This particular point, in my opinion, is one of the most difficult after we've been rejected now twice at $92,000 to $93,000, which is also not a great sign. But of course, it hasn't broken down from the 50% level. It's tested it once and we're very close to that level again twice. So it's in between this rock and a hard place, right? Rejected at the areas that it needed to close above. A tale of 2 weeks, why things have been so crazily different from the 2 weeks. Last week, it closed above a very strong resistance level, and that's why everyone was getting quite bullish. Now, it's closed underneath those levels and everyone's getting very, very bearish. There is a second side to this that I'm looking at when it comes to the S&P 500 and where that currently sits and what might be going on with that later in the cycle. But I think there's still a little bit more time there to go. I'll get to that analysis in just a moment. The last thing I want to say here with BTC is that it's one of the few, I guess, large assets that's talked about that has not retraced the entire US election price increases there. The S&P 500 has retraced the entire amount. The NASDAQ has retraced the entire amount. Dow Jones, the Russell 2000, Ethereum, definitely. Cryptos, they don't even matter, right? They're absolutely destroyed. This is not the place that I want to be. Beginning of the bar range, which starts at about $66,700 or $800, so call it around 66, 67K. And then, of course, that goes all the way up to 81K. But yeah, basically looking at that price down to about $66,000 to $67,000, which is still above the 50% level at 62,400. That one is the bull market 50% level. So looking at the entire bull market range. Now, Bitcoin has not tested this 50% level on this entire run up once it started to break out of the $30,000 top. So you can see the $30,000 top here came back. It fell short by about $1,000 or $1,500. And then it started to go really hard. It started to move quite quickly. And each of these corrections has fallen short by several $1,000s. In this case, it was at 44,600. Back in 2024, we were looking at that low to come in and thinking, well, look, it could get back to 44 and it would still mean that the bull market is on. Fortunately, it only got to $49,000 and that 50% was from the major leg that started in late 2023. And that was basically the one movement that got it from 25,000 up to $74,000. So for this entire bull market, Bitcoin has still not tested the major 50% level, which currently sits at $62,400. Is that a bad thing or good thing? It's not necessarily bad or good. It's still in the strong half of the bull market 50%. Now that's just the nature of macro trend changes. You have to look for major turning points in the market. That price is about 24, 25% away from where we currently are, from where the price currently is for BTC at $82,500. So it's still got a significant way to go if it actually gets there. There's nothing saying that it has to get there because it hasn't done that the entire move. And if it did, it would be about a 43% drop from the high. So when I say the 50% level, that is a halfway point between the 15K low and the $109,000 top. That's why your 50% level is at 62,400 and would be a 43% drop from the high. But as it currently sits, Bitcoin's moved to that low, still 28.5%. So one of the shorter, well, the second largest correction, being the largest being 33%, but it is the largest dollar correction at $31,200. And where we've been covering this from was December, mid-December. The 3 days down has basically called this from that point. So we got that signal on the 21st after those 3 days were confirmed, and that told us that the market was likely starting to slow down. Unfortunately for the bulls, it has slowed down a lot. At the moment for Bitcoin, yep, we've got the 50% level, but that signal has basically kept us on the right side of the market, at least in the case of BTC, since that top. Just like what happened back in March. We had the 3-day down signal here, or 3 bars in the same direction from a very significant turning point. That was this level here. And then, of course, the market was down for 144 days into that August low, and then it took nearly 240 days to get back to a new all-time high. So what could flip this in favor of the bulls? Firstly, we need to see higher lows formed on the daily chart. And at the moment, should this low remain or stay at dead on $80,000 at this point and start to climb higher, putting in higher lows, well, then you've got that first sign. But the major level that I'm looking out for now are some closes above the low 90,000s. We can look at it from this level here at $89,000 up to the top here at 95. So it's got to get back above this line and start to get more daily closes at that level. So far, we've only seen one, and it wasn't enough. It collapsed after that point. Trump came out, talked all about Bitcoin, and it just was not enough to get the market excited, and it's basically sold off from that point. So all of these good news events that Trump apparently is coming up with are still not enough for the market. Therefore, the price action has already dictated that. So could this be happening again? Well, let's take a look at the fear and greed index. So we had a look at this just earlier, but on the chart of BTC, the time frame that we're watching is 120 days from the slowdown of the extreme sentiment. So I'm measuring this from the top there in November. So you can see the price top is over here, but I'm looking at the sentiment. The sentiment really did start to die off from November. And the reason I'm using that over the actual price tops is because we've seen that on multiple occasions when the sentiment starts to wear off, but the price can still creep higher because you're getting those late buyers coming in. And then roughly about 4 to 5 months later, a sentiment low forms and the market picks up from there. The last movement here, that was about 120 days from the lower high to the higher low, and then 154 days from the actual extreme peak to the extreme low. So that was the extreme peak of the sentiment to the extreme low of the sentiment. So again, 5 months here, 5 months here. We take it back a step further. You get the picture of how this is working out. You got the extreme sentiment here, and then to the extreme sentiment at these lows around May 2021, 144 days, so very close to 5 months again. In this case here, we've got a slightly higher low on the sentiment, but the price had kept going down and stalled into these lows here of December. So again, it was about 5 months, 152 days. Now you might ask, well, why aren't you using that extreme low there? You could, but it went beyond that. And I'm looking for an area that is going to be useful for our trading. There, nearly 2 months, it wasn't long enough. We know that. 2 months is generally not long enough for the market. And that's where it led to this price area here, about 150 odd days. So in the case of Bitcoin's history, this could take us out, well, looking at 4 to 5 months, that would take us out to roughly 12 days from now would be a potential low point there for the sentiment reading. If it extended out to that 5 month period, we're going to have to look out to somewhere around April. Now, the interesting part with this is that it lines up somewhat with the stock market and where those lows are coming in. And we're starting to see even more fear in the stock market. Now, Trump has not ruled out a recession. He's not talking about it, but when asked about it, he said, this is what can happen. And you can read about this, Financial Times. They always say that, it's just like sound bites. They want clarity. And of course, Donald Trump has declined to rule out either recession or higher inflation while dismissing the concerns of business over a lack of clarity on tariffs. Now, he thinks there's clarity. I'll leave it up to you to believe whether that's clarity or not when he puts them on, takes them off, puts them on, takes them off. But the market doesn't like it. That's something that we cannot dispute. The prices have come down. They don't like the uncertainty. They don't like these growing fears. And of course, you're starting to see some sell-off as well. Now, an interesting point to note with the stock markets is the same 3-bar rule happened again at the all-time high. So another very, very significant turning point. If you're unfamiliar with this, make sure you subscribe to the channel, like the content so that you see the content come up in your newsfeed. This right here, from a significant turning point, 1, 2, 3 lower highs, lower lows, as I said, from a significant turning point. You can't use that in any of these areas within the market, that aren't significant turning points. That to me is a significant turning point because it was the all-time high. The price had never gone higher than that point. Therefore, it is significant. So we got the 3 bars, lower highs, lower lows, and it's basically just sold off in a very, very fast fashion. Now, the price points for the stock market, we've found some support here coming all the way back to the election prices. So you can see where the election was. There's the Tuesday, the 5th, and then of course the market rallied up on the 6th, and all of those gains have been wiped out now. So the market is saying something here that basically resetting everything that Trump has been talking about, and they're not liking the uncertainty. Okay, so we've said that. Where to from here? Well, the support targets that we've had on the chart for a while now is the 5,600 level. That's the 50%. And should these levels at 57 break down, of course, that's the first level to test. We've obviously got a top, some more lows here, more lows, and currently finding ourselves at those lows on pretty damn extreme volume. So if this is not the final low, probably going to see at least some sort of short-term bounce here with how significant this volume has been on the daily and on the weekly charts. This is the highest volume since the US banking crisis. This doesn't seem anything as bad as a US banking crisis, but there you go. It's the highest volume since the US banking crisis. And prior to that was essentially the bear market low. It was basically the last week of September that led into that final low in October that the market rallied really hard from. So the market bounced pretty damn hard in October. And then you have to go back. This is just the severity of the volume itself. You got to go back to a couple of times there in January. Barring that, it's the COVID low. So basically a handful of times there, top 5 there, top 5 highest volume weeks for this particular market. And you can see on many of these occasions, COVID low, massive bounce. The September low, that was the end of the bear market, big bounce. The US banking crisis, big bounce. So that's 3. Now the other one was, like I said, it was sometime in January, just before Russia invaded Ukraine. In that case, we got to a low. So 3 out of those 4 times we saw the market go higher from this type of volume after a pretty extended move. Now I've got more I want to add to this in a second with how I'm applying this to BTC, but there is a few more charts I want to get through. Now with the federal funds rate meeting, the interest rate meeting coming up next week, the probabilities are to remain paused. Maybe we do see a cut, and that sparks a little more interest in the markets, maybe looking to form another low there. Still 9 days off from that announcement, so we'll keep following and seeing how this progresses with the market's action. Now, onto some of the slightly more longer term positive for the bulls outlook. So we're seeing a whole lot of negativity here already. The price is down. What do the cycles look like? Year 3 of bull markets can be choppy, meaning that we've seen it from the low point and we're into the 3rd year. So not 2023, the 3rd year of the decade, but the 3rd year of the bull market. This is the red line here. Currently, it's here in going into year 3, and it looks like it is a choppy period for each of those previous bull markets. So you can see the reference points they've used here, one from the 70s, another from the 80s, 90s into March 2000. You've got the March 09 to 2020, the 80s, another one here that led into the end of the cycle peak, and the current, which is in red. So it's a bit of a choppy period. Now this chart for the post-election year also shows a very choppy pattern for the first quarter of well, post-election years. The red line is where we are. All post-election years is the black line. January, February, March, April. And the line essentially shows sometime in April, maybe leading out of April, is when you'll start to see that clarity on the price. But basically, March is a very, very rough period, no matter which one we're looking at. Incumbent party losers, all post-election years, the aggregate as well. It's a pretty rough time. March is a very, very rough period. Now, going out longer term, actually, that's a good point here. Longer term, you're still seeing each of these cycles head into positive territory. But looking at the pink one, incumbent party losses. Important point to note here. Although we may see some rises, you then again get some pretty severe sell-offs well, that's from May into July, a little bit of a rally here, and then another low September, with October gaining ground. Remember, we saw that in 2022 as well, with that low September, October. So the market needed some time to digest and then start to head higher. So that's just looking at the cycles themselves and the past data. Now, of course, we've been following this for years on the channel, and it has basically kept us on the right side of the market for a very, very long time in the face of all of the uncertainty and the recession calls and the pessimism and these bear markets that never eventuated, right? But we are in the winner's curse phase, looking for a peak very soon, 2025, 2026. The one thing that I've been saying for a while now when it comes to the winner's curse phase is the volatility. You've probably seen me draw this quite often. The way I see the winner's curse play out is the uncertainty of this picks up, the volatility picks up, which leads to wild swings in the market. And if the swings aren't that wild, the emotions definitely are. We see very wild emotions with any movement to the upside, and the same deal for any movements to the downside. Now, in December of 2024, I pointed out the first sign that it's likely we're beginning to peak. We're beginning to peak across the US real estate and economy. I think this video has gone long enough, so I'll have to come back to that in previous videos. Yeah, that could be another way for you to like the video and subscribe for more. But as I pointed out in that video, I think we're coming to some sort of peak. Fear and greed index here. This is a nice, interesting way to look at it. This is for the S&P 500. It's also showing that we've got to the extreme fear, but on these occasions when it gets to the extreme fear, it doesn't necessarily mean that that is the final low. And there's often a significant sell-off. Have we already seen that? This is posted about 12 days ago now. This could be that sell-off, right? That leads us into the final price low or close to it, because the extreme fear has picked up already from those days prior. And as we can see, here they are. So it's March 3rd. You got to the extreme fear 27th there. Let's have a look at the timeline. 24th, 25th, and 27th, extreme fear at 19. So we're just bumbling around here on the market sentiment for the stock market. The prices have gone lower, yet the sentiment reading has basically been range bound between 17 and roughly 20. Second week of March lows are coming the past 2 decades. A lot of these cycles keep leaning towards lows coming in around March, and then you start to see an uptrend. So one of my theories that I've been tracking here is that once we get a clearer move on the stock market, that is going to be a lot easier for Bitcoin to have its turn to shine. But now it's done the same thing that it's done every other cycle. Bitcoin is finding it very difficult to go up, while the stock market is not making new highs here. And essentially, it failed at around November. You didn't really see greater highs here after November. The top there was at 6,044. And then barely went high. You had 6,100, 6,128, 6,147, and here we find ourselves down, 5,770 odd points, so about 8% from the high. So I think until the S&P can really get a clear move on again, potentially, come back and retest these resistance levels, maybe even break through them, I think it's going to be a difficult game for BTC. We've also seen the US dollar start to break down, which is part of our theory here for the 18-year cycle. The second half of the real estate cycle typically shows weakness for the US dollar. That was a massive, massive collapse week last week, closing underneath the 50%, underneath the swing lows, causing an overbalance in time and price, break of the swing, break of the 50%, do have all these other signals to tell us that it's likely going to come back and at least test the 100-point low there. MicroStrategy has also failed at the 50% level. You can see here at around $322. So I'm not getting too bullish on MicroStrategy, and I haven't been bullish on this at all. I've talked about this since that November peak, late November into December. This is basically like a red flag telling us that the end of the cycle is coming. The total cryptocurrency market cap, a lot weaker than Bitcoin at this stage, obviously with ETH and Solana being some of the bigger names in the cap, and it's closed underneath its 50% level and those highs there at $2.7 trillion. So unless this can reverse very quickly over the coming days and get a weekly close above 2.7, this is not looking great for the total cryptocurrency market cap either. The one tiny saving grace is the USDT dominance. At least the volume has begun to drop off here. So it doesn't seem like more money is flowing in. Well, more than before anyway, when it did have its first sell-off. Well, the market had the first sell-off, and then we had these highs here at about 5.5%. The concerning part here is that we're getting more time above the 50% levels, which just increases the chance that the USDT dominance will then come and break this overhead resistance, the level that at least the bulls don't want to see, and then come back and test the next level, somewhere around that 5.9 to 6%. And worst case, well, can't say worst or best case, right? It's pretty much the next resistance level is at about 6.6%. And that is a lot of money into the USDT, basically pulling up the USDT dominance, which is similar to what we saw in the previous cycle here. This was that May dump. So May 2021, you had the huge dump into the low in June, and then you had this very, very weak bull market that lasted almost the second half of 2021, right? That seems to be what is happening yet again. It wasn't able to break down from this low. And yeah, basically to reverse this, to invalidate it, definitely need some closes underneath 5.2%, and then again, very quickly underneath 4.75%. Ethereum has been very much on the weaker side. You're now under $2,100 under all of these previous lows, and you got the weekly close under there. So that's why the total crypto market cap is much, much lower than where Bitcoin is. Bitcoin's still above its 50%. Total market cap's below it because ETH has basically been very, very weak. With the double top that's in play, it's broken down from the 50%. It's tested the 100% now and broken that at 2,146. Therefore, the next couple of targets, 1,650, and all things considered, it sounds weird to say these numbers, $1,166 for ETH. That would be the double top target. Okay, there's a 50%, there's a 100% price targets, and then your 150%, 1,166. Okay, XRP still holding above 50%, but basically reversed most of the gains from the prior week, still above $1.80. Solana weaker here, closing under those levels 120, and it's basically moved towards the target that we've been watching here at about $110. And then breaking down from that low, you got to be looking somewhere around $90. Obviously not there yet. I know there's people buying the dips and all sorts. But yeah, if you start to see it continue to break down, it's probably going to be a bit of a difficult show here for Solana. And SUI coming back to test the previous tops. So although it's under 50%, it's still above the previous highs here at around $2.20, $2.30. Okay, so putting this all together was the S&P 500 has not broken any of the macro structure as it currently stands. Therefore, we still need to be on the bullish side, and we've seen an increase, a very big increase in the fear towards these lows. The market sentiment, the posts across X and all sorts are really, really starting to form into this type of cycle. Doesn't mean that we can't get a lower price, but this is sort of that period now that we've been tracking, at least for quarter one, of some sort of potential low. I know I've said many, many words there, but it's really not to get too feared out of the position at this stage unless there is the confirmation that the market is breaking down. You start to see closes underneath this top here at 56 on a long-term basis. That's the 50% level and the previous swing top there of July before we got to that August dump. And the breakdown comes somewhere around that 5,100 points. As for Bitcoin, those price levels come out at 79,000. So that's the current shorter term 50% level. The top's here at 74, and then the bull market 50% is at 62,400. I'm still watching the timeframes here because these are also lining up with the cycles. So the S&P 500, you've got the 4 and 5 month periods here for the market sentiment to reset. It's going to depend on where the price lands once this sentiment resets. Does it turn out something like the bear market of 2022, or do we get this higher low beginning to form on this sentiment? Yet to be seen. That's why I think it's been a very, very tough week, and the sentiment has essentially flipped from this week being bullish to this week being bearish. You can see it on the charts now where everything has landed. Things seem to be getting a bit overextended and too fearful in terms of the stock markets. Should we see some bounce here, might be some good early signs that we will begin to see things turn around in line with the cycles that we've been watching here on the channel. That's enough for me today on such a big update. I'll be back with you as often as possible, providing we still have internet and power over the next couple of days. I'll see you guys back really, really soon. Till then, take care and peace out.